Hey, what's going on YouTube? Welcome back to my investing channel. As usual, I'm your host Calvin, and today we're going to be talking a little bit about dividend investing, what it is, and sort of how to get started and how to find some of the stocks to put in this dividend investing account. So before we get started, if you could, scroll down, show a little bit of love and support, hit the subscribe button. I really appreciate all the support I can get. And before you invest, please do your due diligence, as well as if you're new to investing, I would definitely recommend talking to an advisor or an expert before getting started. With that being said, let's jump right in. So dividend investing is a passive income strategy where you buy stocks that pay a dividend which is a regular income on a either monthly, quarterly, annually basis. And what it means is you're going to be buying shares of a stock, and regardless of whether the stock goes up or down, you're going to be paid a portion of their profits or their income. Dividend investing is pretty popular with a lot of larger cap companies, specifically in the energy sector, the financial sector, and the travel sector. The travel sector did have a lot of companies that paid dividends prior to the pandemic. While a lot of them are on hold, I do expect to see the travel sector come back and push out dividends. So one of the neat tools that I like to use for dividend investing is going to be NASDAQ.com. So I pulled up, let's try to pull up something that's pretty popular. Let's do Bank of America. So Bank of America is trading at about, let's see, we're going to use Yahoo Finance, BAC. It's trading about $37. It pays a dividend yield of about almost 2%. This is a little low. You can see the schedule that it pays about 18 cents every quarter. And how this works is the dividend is declared on what is quote unquote called the declared date. And then there's a record date. So you have to be holding shares by this date. So at the end of the market close on March 5th, if you're holding shares, you will receive your payment. You can sell your shares on today, which is the 8th, or any time going forward before the payment date, and you will still receive the 18 cents per share. So what happens is this strategy entails you buying a bunch of stocks that pay a dividend to generate consistent income, which is you're going to be using to reinvest and hopefully snowball that account and reap a lot of gains using this dividend mindset strategy. One of the most famous investors, Warren Buffett, owns a lot of dividend stocks, and what he does is he takes these dividends and continues to grow his portfolio over time and builds up this large snowball effect, which realistically has turned into a large avalanche effect. So when you're dividend investing, I would suggest, trying to find companies that pay probably about at least 3% per 3%. The dividend yield is calculated annually, so 3% annually is sort of the general target I will look for. If you do want to pick a company that is part growth and part dividend, you can shoot for a little lower. But for example, Bank of America pays only at 1.95%. I don't think they're going to be growing a lot. I would stay away from this one to try to find something else. One of my favorite companies that I picked up during the pandemic is going to be ExxonMobil. The company pays a 5.7% dividend yield. You can see that it pays a nice 87 cents per share. And for each share that you own, it pays you about $3.48 per year. And ExxonMobil is currently trading around almost $61. I bought this stock in the beginning of the pandemic, right around here at around 40, or actually right around here at around like sub 40. And then I added some more when it was around the $32 range. So I am up almost 100% on this investment, in addition to the dividends that I receive per quarter. And this kind of falls in line with what I'm looking for. You see it's a 5.7%. By owning 100 shares of ExxonMobil, which is going to be cost you around $6,000 plus at this point, you could expect to receive around $350 in dividends for every 100 shares. So you can see that in 2 years, in 2 years, your investment should return over a 10% in dividends without accounting for changes in price. And what you do is, once you receive, if you have 100 shares of ExxonMobil, for example, you'll get about $350, and you take that $350 and you reinvest it into more ExxonMobil, so another 6 shares. So the following year, you'd be getting an additional about $18 to $20 in dividends versus what you get last year. And by reinvesting these dividends, you create a really exponentially growing effect, right? So I think dividend investing is one of the best long-term strategies. It's not as glamorous, it's not as profitable as trading, but it's a good way to limit volatility, limit risk, and when you're dividend investing, you don't have to worry about buying the dip or holding cash. Because you are super long on these companies, you believe that they are stable and essential to the economy and infrastructure. You're not necessarily going to be trading, buying, or selling. What I do is I have a long-term dividend-focused mindset account where I pick up stocks such as Disney, ExxonMobil, Wells Fargo, Citibank, among others, on a monthly basis, and I'm just planning to hold these stocks for the next 5, 10, 15 years. Unless something dramatically changes, I don't plan on selling out of these companies anytime soon. So with that being said, when you're dividend investing, a couple of key things to always remember is you want to find a yield that is roughly, I would like to say 3 to 4% minimum. I don't really want to go for anything under 3% unless the company has a lot of growth potential, such as Apple or Microsoft. And then you want to also always be aware of the record date. You have to be owning shares on the record date in order to receive payment on the payment date. So remember, if you own here, you can any day after this, after the 10th, you can sell your shares. You'll still receive payment. If you buy shares on the 11th, you will not receive your dividend payment. All right, guys. So that's just a little quick rundown about dividend investing. I hope I can give you a quick little gist. Feel free to drop some comments if you have any questions. I'm always open to answering some of these questions. And I hope you guys get started with this strategy. It's definitely seems like the market's rotating out of growth and back into value stocks. And a lot of value stocks do pay a nice dividend. So thank you guys so much for tuning in, and be sure to hit the subscribe button. I'll see you guys soon.